Welcome to Trade Ideas. I am Brian Price here with Max Wolff, co-founder of Multivariate. Max, great to have you with us.
Always a pleasure. Happy New Year to you and yours and the audience out there.
Thank you. Appreciate that. However, for folks at home that might be holders of Apple, it's been a little rough.
That's true, although 2018 was probably not the toughest year to top as the experience of owning Apple. By the way, it wasn't a great year to own some of their products either, which might be part of the story about why it wasn't a great year to be long the shares.
As of this moment, Apple has become the fourth largest company in the world, falling now behind Google, Amazon, and Microsoft. Might get a little uglier, but what say you? You've studied this name for a long time. What should folks expect?
Yeah, so look, this is a valuable company. It deserves a place atop the corporate titans for cash flow across the sort of success gamut, whatever you believe should be the right metric. Certainly market cap probably doesn't need to be the fourth. It could probably rise again, although it could rise because it falls less. The truth is the whole space was out over its skis. And as I've said lots of times, and been wrong most of the time, but maybe I'm right now. So, like the broken clock, I gotta sort of celebrate those rare occasions. Buying tech up is about buying the future, right? It's about hope for tomorrow, and it's not a hope for tomorrow world. Right? It's a world between people who think it was good enough a year ago and people who want to celebrate return to the 18th century. That's not a market that makes people hopeful and makes people love tech. And Apple has sort of clung to its premium pricing, and it's become a little bit less clear if they're delivering premium product. And I think that's causing some headwinds. And I think the immediate cause of the trouble they're right about, which is clearly this trade war or trade war issues are non-minor, particularly in the electronics world. And I always urge the folks who are yelling that I'm wrong when I have this conversation on the news to look at everything they own that plugs into the wall at home and then call me back if there's anything there that was made in the United States. And if there is something that was made in the United States, let's not count it if it was made so long ago that if you had any hand in making it, you've died of old age.
Let's break this down piece by piece because there's a lot to unpack there. So let's start with this trade war and with China. Is it as much an issue as a trade war, or is it also about competition from China? That there are other companies out there, other linebackers that are offering comparable services and comparable products that maybe folks are turning to in the market now?
For sure. So we've seen Apple market share in China have lots of headwinds and not do what it was supposed to do rise-wise and then start falling way before President Trump decided to have his delicious taco salad and ride that escalator up and down with a bunch of hired supportors, right? So this is an older story.
It's a very interesting way to say he decided to run for president. You can always come to me with a
unique... I tried to sell cat to pig there. It's a tough job, right? In any case. Yes, before we were great again, that Apple had problems with being popular in China, partly because they have some really good quasi-knockoff type phones, to be honest, that sometimes look a lot like an Apple phone, but that are very inexpensive and very popular. And folks in the US tend to forget sometimes that Android is 85% of the world market share for a reason, and then it's pretty much dominant outside the US.
So we have this global growth story slowing and has really been for quite some time. Cash. When we talk about the cash pile that Apple has, it's not quite as simple as some folks might view it as. It's not just that one clean number. Walk me through debt as it relates to the cash they hold and why it could potentially be problematic for Apple.
Sure, so there's still obviously a lower rate when you bring that cash back to the US if they want to do it. That was one of the early decisions that was pretty popular actually from the Trump administration. So it was a widely well-received decision. That helps Apple a bit, which made people even more excited about the 230 odd billion in cash. However, over the years, they've quietly done about $120 billion in debt issuance against that in order to not have to pay the 35, now 21% tax on repatriation. The truth is people aren't bringing their money back here, not because of a Chinese-based hoax or conspiracy, but because growth has been faster outside the US. So bringing money back to the US, being subject to a high tax rate, and then sending it right back out to chase the higher growth around the world is not a terribly wise decision, separate and apart from any political or free trade ideology that you might have. So Apple has been artfully playing it, but people have tended to forget that $120 billion is not actually such a small number. And if they wanted to bring the money back here, if they intended to, they would have. Now, especially with the lower 21% tax rate, which, by the way, those of us who have backgrounds in macroeconomics could easily tell you is probably not sustainable, so it probably won't stay this low, which means if you wanted to do it, you'd probably have done it.
With the cash available, we're all aware of the largest purchase they have to date, which is of Beats, the $3 billion acquisition. Would you like to see Apple take a stab at a bigger piece that's out there? Or is there something that you think they should consider taking a hard look at?
Yeah, so they need to go into some new area to bulk up their services business. I don't think they're going to run out there and buy Twitter. I don't think they're going to run out there and buy Tesla. They need to buy something accretive, by the way, a la the last couple weeks, and neither Twitter nor probably Tesla would fit that bill. I do think we're going to see them get into either some kind of financial technology or healthcare related. They've moved in those directions, and a big acquisition in that space might make sense. The future does need to be services, and they now need to accelerate that because they need to offset what looks to be at least a stagnancy in the handset units. And Apple's largely been a handset story for a very successful 10 years, and so they do need to look for another driver going forward.
So if iPhone sales are slowing, global growth is slowing, the cash isn't what it necessarily seems to be, and they've got money to burn, could this company become a software company in 10 years' time when we talk about what its main function or main focus is?
Yeah, it sort of already is, to be fair to them, right? So it's not the perception. But Apple doesn't do much in the hardware. That's all subcontracted anyway. What Apple really is great at making operating systems and the greatest marketing machine the world has ever seen. So if they could bring those to a new area with what is pretty good on the margin front, that's a good thing. But let's remember something. The risk of Apple was always why people liked it. In order to make a product and sell $50 billion worth of that product on a quarterly basis, which is about what they sell across the lines of phones, means you've done the holy grail, which is hard to do and even harder to keep doing, which is produce a luxury product with an enormous margin and then sell it to the whole darn world. And you never really want to bet on anyone doing that once, let alone twice, let alone 3 times. Now, these guys have done it, and Apple is an incredibly well-run company and will continue to be valuable. But I don't know how quickly you come up with the next sort of 3 standard deviations from the mean event. I think it's dangerous to assume that's on demand.
We're trading at around $140 right now, down 10% during the session. Walk me through the levels. Walk me through what folks can expect. Everybody and their mother has reduced their price target. What say you?
So I think Apple's actually going to have rough sledding, and I think it might be rough sledding for about a year here. If you're long-term minded, it's still a great company. They print a ton of cash. Buying Apple's earnings is cheaper than buying almost anyone else's earnings. And given how much cash they produce and how much cash they have on book, there is a defensive value to Apple. So I don't see the bottom dropping out. But Apple got to be what it is, being the king of the smartphone business. And the smartphone is on the south side of the mountain, coming back down. It's not exciting, it's not definitive, and it's losing a little bit of its status panache. And it looks like the future is going to be a little bit more of a voice-activated story, where Siri has fallen somewhat meaningfully behind Alexa. And I think that they didn't get enough of a sort of comeuppance there on the HomePod, which was a major whiff, right? It basically flopped. And so they've ceded that market largely to Google and Amazon. And last time I checked, those are somewhat formidable competitors. So they've ceded some ground to some deep-pocketed, formidable competitors. They're still overly dependent on the smartphones. I think Apple's rough sideways sledding with a slight downward bias for 12 months here.
And how far downward? Give me a percentage.
You could easily get into the 120 handles here. I don't think you'd go a lot lower than that. You're starting to talk about a single-digit PE with tons of cash there. And Apple would only even go that low with the overall market. My guess is Apple, from today forward, will be about market perform. I don't think it's market outperform, and I don't have super high hopes for the market.
What could be a positive catalyst for this name? What is something that could happen? We talked about potential acquisitions. Is there something within the story that other folks haven't been focusing on that could potentially drive this name higher?
Absolutely.
Maybe buybacks, something along those lines?
Yeah, so they could get more serious about the in-work app partnership they had with IBM to try to become a little bit more of a workplace device. They could figure out how to make some more affordable entry-level notebooks and try to pick up a little bit of PC market share, although I don't know how big that market's going to be for them in the short run. We could finally see them merge iOS and the operating system for the desktop to have a touchscreen, which they don't have, right? They've been slow to that party as well. That would be interesting. What they really need to do is jack up the services as much as the Apple defenders, and there are lots of them, lots of smart ones, are saying. Because they all say, look, they're just going to go to services. The problem with that thesis, unless they make a change, is people's overspending for services are really only going to do that if they're buying your device. So the reason that you buy Apple's repackaged version of Amazon Web Services for 4 times as much as Amazon charges is really only because you have that smartphone.
Max Wolff, thank you as always for joining us on Real Vision.
Thank you for having me.
That's Max Wolff of Multivariate, and I am Brian Price for Real Vision's Trade Ideas. Thanks for watching.